Toronto-based Hydrostor is one of the hottest clean tech companies in North America right now, and it recently signed a US $1 billion deal with a California customer to store electricity using its unique technology. So I'm going to talk to Jon Norman, Hydrostor's president, about that. Welcome to the interview, Jon.
Thanks, Markham. It's always a pleasure talking to you. And again, congrats on the podcast.
Well, thank you. Congrats to you folks. I mean, I talked to you about a year and a half ago. I think it was our last interview, and you were getting into the market. You know, the technology looked like it had a lot of potential, but boy, has a lot happened in the last year and a half. So before we get into this deal, maybe just catch us up on what Hydrostor has been up to.
Yeah, it's been a big year for Hydrostor. 2022 was a fantastic year. So right at the beginning of last year, we actually announced our partnership with Goldman Sachs. So they've backed us to the tune of 250 million US. We're sort of one of their key pathways for long duration storage globally. And Canadian Pension Plan actually joined as well for 25 million a couple of months later. So we have really, really strong backing. We're very well capitalized. We've been growing the team here. We continue to be based out of Toronto, but have pretty significant project opportunities both in the US and overseas, some of which you were alluding to, Markham. And we've had some really great progress and announcements on our two most advanced projects as well, which I think the last we spoke, I may have mentioned them. But just in terms of updates there, so this California project you were mentioning is a 500 megawatt, 8-hour storage duration project that in the past year as well, we've hit major permitting milestones in California. We've received the full amount of deliverability onto the California grid, which is a really big deal down there because the grid is so constrained and they have so many needs, as I'm sure many of your listeners would have heard about with, you know, the lights going off and whatnot, decarbonization agenda. It's really hard to get those electrons on the grid. And so we received the full 500 megawatts of deliverability, which is something like 12% of the actual delivery capacity that was awarded in that year. So for the entire California grid. So really, really important project to the grid as well. And you were just alluding to this contract. So we're really pleased to have announced just over the past couple of weeks, one of the largest long duration energy storage contracts in the world, which is this $1 billion contract with a community choice aggregator that's known as Central Coast Community Energy. So they're taking 200 megawatts of that total 500 megawatts and are an important anchor tenant to this project advancing forward. The only other thing I'd maybe give a bit of a quick update on is our Australia project as well. That's actually likely to be our first large-scale project in the ground, which is 200 megawatts, 8 hours. And we're currently, over the past year, we were actually selected as the preferred reliability solution by the largest utility in Australia. So these are really, really fantastic milestones. I would say not just for Hydrostor and our advanced compressed air technology, but also just long duration storage.
Little context for viewers. What Hydrostor does is it excavates its own big cavern. Then during the day, say when solar is really, really cheap down in California, it pumps air into the cavern, compresses that air, and then when it wants to generate electricity, it releases the air through a turbine, and that is what creates the electricity. And this technology is so simple. And I remember Jon asking you in our first interview if it could scale, and it looks like it can scale really, really well.
Yeah, I would say the simple answer to that one is not only can it scale, it's better at scale. So we've put in place smaller scale projects here in Ontario as just important proof points, commercial applications, showing it, the financing and performance guarantees. But in reality, we're more a systems integrator than we are a technology manufacturer. So we're just really taking off the shelf turbines, compressors, heat exchange equipment, all of which has a much more standard supply chain pathway in the hundreds of megawatts scale than the smaller scale. So that's a big part of the reason that we look at these 2 to 500 megawatt plus projects. Plus, because we're building out that cavity underground, there's a big fixed cost to doing that. We tend to be most economic where we're at very large scales. And again, the construction of those cavities is really just redeploying techniques from the hydrocarbon industry at the large scale. So it's very much a scale asset by its very nature.
Let's talk about how this is going to help California, this particular project down in Kern County. My understanding from what I was reading is that it's 8-hour duration. Why is 8 hours important? Why not 12 hours or 16 hours?
Yeah, I mean, that's a great question, and something that, I'd suggest we even have a follow-up discussion on, because that market around long duration just continues to evolve. But what we found in markets where they've really defined the need, both Australia and California in particular, they've gone out and specified 8 hours as being what's required to supply the storage duration that they need. It's a bit arbitrary, but it's not based on nothing. So it's based on the fact that having that 8 hours of continuous discharge allows them to reliably replace fossil-fired conventional assets. So in other words, it's reliable capacity to the 95th, 99th percentile. And there is an advantage to going longer durations, but it's at this point, it's diminishing returns. So you hear a lot of talk about, seasonal storage being what people really want, or multi-day storage. And sometimes that can be really, really helpful. It's a question of what does the grid need in the near term? And the reality is there's going to be a place for all of these durations. But right now, what a lot of the jurisdictions are focused on is an 8-hour threshold. And that's what we're meeting in California, defined in regulation, as well as in Australia.
A question about your caverns. How big is this one? Is it, because it's in Kern County, which has most of California's oil production? Back in another life, I drove up and down Highway 33 in Kern County many times, probably past the site of your facility where it's going to be. So how big is it? And is it on an old oil and gas reservoir, that kind of thing? And are there any geological issues with building multiple caverns in a region, that sort of thing?
Yeah, I actually, one important piece of context, it is in Kern County, but it's actually on the southern boundary of Kern County. And so it's not even particularly close to where they have oil production. And it's actually almost equally close to the LA basin, which is one of the potential delivery points for us that's very important because there's really big needs in LA. So it's a very valuable location generally. The cavern is one that we're constructing out of hard rock. So that tends to be consistently our approach. We don't require salt caverns, can use them, but if they're not available, we don't require them. We generally don't use oil and gas reservoirs. And we use this technique to build it out of hard rock. The size of the cavern for that 500 megawatt 8-hour facility, I guess the way to conceptualize it is think of 2 football fields and about 1 football field or 100 yards high. And that's about the total void space that we're mining out underground. It's actually done not as a big cavity, but as a series of drifts at different levels and at different, so kind of like these horizontal shafts. It fits quite nicely on our 80 to 100 acre footprint that we have there. And the reality is it can be quite flexibly sited because really what we need for that is hard rock. And so there are geological considerations for sure, and we design around those geological considerations, but that's typically about the scale of a cavity and why also it's much lower impact overall than say pumped hydro, which requires just a much greater volume of both storage space, but also water that's used. And it's really about, 10 to at least 20 times the volume, and therefore very difficult to permit.
I wanted to ask about the economics of this. At what price can you produce electricity, say in either megawatt hour, price per megawatt hour, or price per kilowatt hour? And does your storage system lend itself to arbitrage? Because that often comes up in the context of battery storage.
Yeah, so I guess on the second part of your question, certainly it does. A big part of our revenue off the California market is from arbitrage. That's actually factored into our contract with that Central Coast Community Energy off-taker. We split some of those revenues, but there's a big whack of benefit that it provides to the grid by providing this arbitrage. So that's a really, really important point. In terms of cost, we tend not to look at it as much as dollars per megawatt hour, kind of traditional energy cost, because it's a bit of an awkward metric for storage, standalone storage, because we're using off-peak electricity from the grid, and obviously the all-in delivered cost depends on the cost of that off-peak energy. But what it's really providing is this clean capacity that can replace or act as an alternative to these fossil assets while also storing some of the significant renewable energy there. So the cost of doing that from an installed cost basis is typically in the mid 2000s per kilowatt. So think of just a simple overnight cost, and this is all US dollars. Think of it as a simple sort of overnight cost, which compares really, really nicely in terms of providing that duration to any other alternative that you can provide. So, I'd be happy to, elaborate on those costs. If any of your listeners were interested, they can certainly contact us, but that gives you kind of a general snapshot.
Jon, it seems to me that in California, and there's so many issues there around generation capacity. They run at a very small reserve compared to other states. Their transmission capabilities are limited. The transmission system is often congested. There's on and on and on. And it seems like pairing your technology with solar and locating it within a reasonable distance to the customers gets around a lot of that. And it just seems like such an ideal solution for California.
Yeah, I mean, California is an interesting case because their needs are so significant. So they've had so many different issues hitting them, from resiliency to wildfires to infrastructure that's shutting down to inability to, build new infrastructure on time. And so they have a lot of things facing them. What's interesting about it is they have had such a strong renewable agenda for so long that their penetration on the grid is already really, really high. So when we tend to offer, we do look at providing a blended product with, say, solar or wind, and giving kind of an all-in renewable, clean, almost near baseload product. They don't really need that in California. What they need is the storage. And they already have, I'm sure many of your listeners would know or heard of, the duck curve, where they're trying to fill that quick drop that comes as the sun that's going down, and the sun is going down, and they need to quickly ramp up generation. Our asset's very flexible to be able to do that. Is really a perfect fit. But what they're finding, to go back to why it's 8 hours, 2 hours, 4 hours, what they were originally seeing with batteries just isn't long enough to help address that need, because the solar and wind penetration is so high already that they need to bring it well into the evening on a reliable, continual basis to be able to manage the grid. And that's where you see the value of this type of asset.
Right. So if the sun goes down, let's say in the wintertime, it goes down at 5 p.m. And that's roughly about the time when the demand, people are arriving home, they're starting to cook meals and do laundry and all of that sort of thing. Air conditioning is a huge demand. And so from that period, from say 5 p.m. to 1 a.m., where you've got maximum load, that's when your storage kicks in. And that's its big advantage,
Yeah.
Right?
Exactly. Yeah. Typically, we would be charging, particularly in this part of the grid, midday, because that's when all this solar generation is coming on and there's surplus electricity. And then we're really starting to inject that onto the grid come late afternoon, early evening, and into the later evening hours that they need to buffer to be able to restart the next day.
Well, final question, Jon. What does the future look like for Hydrostor in, say, the next 2 to 5 years?
Yeah, the future is bright, and we see many different pathways that we're actually preparing for right now. So not only will we see the COD and operational dates for these two projects in California and Australia, we're very rapidly building a pipeline. Mostly we've been focused on the US, Canada, and Australia as kind of core markets for us. We have a number of other projects, some of which are public, that are in earlier stages of development that we expect to see advanced and hitting financial close really over the next couple of years. And we're expanding into new markets as well. So right now we're establishing our expansion strategy along with our partners, Goldman Sachs and CPP, but we are really focused on Europe, which has, really evolved a lot even since we last spoke. Just given the Ukraine situation, there was always a need and a renewable decarbonization agenda, but I think there was still a reliance on natural gas, right, through Russia. And now that world has changed, and so storage is a completely different value proposition there now. Very high priority market for us. India is another one that just their need for storage and infrastructure, very large. Japan has really good signals for long duration storage. And there are many other markets on kind of a one-off opportunity basis that continue to evolve. So we're going to continue to see really hundreds of percent growth in the long duration market. And because of our anchor projects in California and Australia, we are really, I would say, seen as the third near-term commercially available pathway for long duration storage. In other words, you can stack batteries together, it'll work, be really expensive, so that's challenging in and of itself. You can do pumped hydro, but a lot of the low-hanging fruit's been taken, and trying to permit them is really, really difficult. And compressed air is really seen as this is what we can put in place to meet our multi-thousand megawatt needs in different markets. And that's certainly true in California and Australia, and increasingly that's becoming recognized in other markets as well. So we're really looking forward to that growth over the next 5 years.
Well, Jon, congratulations on your success, and we'll check in occasionally to see how things are going with you.
Perfect. We look forward to it, and thanks again, Markham.